Okay, here we go. Now I'm off of mute here. We can get this started. Everyone getting audio now out there? Finally, yeah. As promised, starting at 3:15 Central today, welcome to the very creatively titled Trading Psychology with Jared Tendler. Just introduced today, I have Jared and Hoag with me at the moment. Jared, as some of you might know, he's the author of several books on poker mindsets, on trading mindsets. He can tell you more about that. The Mental Game of Trading is a great one. He's worked with PGA golfers, professional gamers, professional poker players, traders. Hoag, how are you doing?
I'm good. I'm good. How are you, Jack? I'm excited for today.
I am excited also. So we're going to hand it over to Jared shortly. We're going to be in the behind the scenes in the comments, taking some of your questions. If you put them in that Q&A section that Zoom offers, we'll try to get to as many as possible. If you have any questions at all, just put them in the comments. And ourselves and John Doherty is down there, I believe. 1 second. Hoag, Jared's saying that his video is disabled. Can you help him with that? He was on earlier, right, when he came in. Oh, there he is.
There we go.
Perfect.
You guys can see and hear me okay now?
Absolutely. I was, my heart skipped a beat there and I saw that after all that, the video was disabled. But hi, Jared. Thank you so much for doing this with Topstep. We hope to continue this as a monthly thing going forward, but this is the first time we're trying some things out and we'll kick it over to you.
Yeah, rock and roll. Listen, I'm happy to be here. Enjoy what you guys do here at Topstep, and certainly, Jack and John, good rapport with the work we've done before. I think there's some good synergies. So yeah, I'm excited to be here and excited to see such a great crowd. 160 people come in out of the gate here. Nice number. So there were some questions that were sent in to me in advance. I'll get to those. By all means, fire your questions into the chat, into the Q&A box, and we'll get to them. I do want to kind of say out of the gate here, we're going to be talking about a lot of different areas of trading psychology. And for me, it's just really important that you guys get something of real tangible value out of today. I want you to walk away with at least one thing that is going to help you tomorrow in the markets, right? So I think to do that well, be thinking about what you need to know. Right? Be thinking about what you're struggling with, what you need the most help with, what you think could be the catalyst to kind of get you over the hump here. But I will say that, while many of you are, fighting for consistency, you're fighting to trade your system, under a variety of different market conditions, different emotional conditions. You're fighting to get profitable in the live market and making that transition from the sim. You're fighting to get a funded account and fighting to keep it. And as I've worked with many people, many traders across the spectrum, I've been working with traders for about a decade now, across the spectrum, right? So from some of the biggest institutional traders in the world to traders, who are just getting started and trying to get funded, like many of you are. And in my experience, there are certain methodologies and ethic that people bring to this endeavor. And if you, in the beginning of your process here of becoming a skilled, profitable, consistently profitable, very successful trader, are looking for quick tips and easy answers to more complicated problems, then you're basically gambling. And we all know that this endeavor is not about gambling. This is not about making money fast. And then what, right? I mean, many of you have made, a significant amount of money quickly, only to see it disappear, maybe just as quickly. And you might know the reasons why. Those reasons might be because of tilt and because of desperation, because of FOMO, and all the reasons you can't keep your finger off the mouse and get involved in positions or get out of positions at times when you should not. But the bottom line is, to develop consistency means having a system, having a strategy for the mental game. It's not about having just these quick tips that are going to somehow change everything for you. I promise you, if I had answers that were as simple as that for complicated problems, they would cost a lot more. It takes work. I mean, you can't read a book on personal training and have that give you muscles, right? Just like you can't read The Mental Game of Trading, right? My book on trading psychology, you can't read that book and have it instantly transform your mental state. You've got to do some work, right? And I've developed a system, right? I began developing that system in golf, almost 2 decades ago. I then transitioned it to poker, honed it in poker, and then expanded it to trading and esports. And so my point in saying that is that the system works because it works on the basic fundamental principles of how the mind and the emotional system operate. And when you understand those principles, everything gets easier, right? It doesn't get easy, just like building muscle in the gym, right? You got to work hard to build muscle, to develop endurance, condition your body the way that you'd want to if you were an athlete. And so if you're trying to become a trader, not somebody just who makes money in the markets, right? Those are 2 different things. And if you don't know the difference immediately, right, let's think about it, right? A trader is somebody who has developed a skill set that is capable of yielding an edge or an advantage in the market, has proven that over different market cycles, right? If you're just making money in the markets, you might be getting lucky. And many of you are looking to make money quickly. And that's not bad, but if it's forcing you to not take the time to develop the skills you need from a technical standpoint, from people like John and Jack and others out there who can help you with the X's and O's in a sense of trading, but you also need to have the mental skill, right? And that is not something you can just, again, read a book or get a quick tip and have that be a transformational thing for complicated problems. So how do you know if you have a complicated problem or not? You can try some things, but if it's not working, right, then you need to rely on something that is more systematic and fundamental to the whole trading psychology sphere. So, I lay out a very detailed strategy and system in the book. I'll give you a very, very kind of brief overview of that. But the first step is to gain an understanding of the problems that are disrupting your performance, right? If you can't see what's happening in real time, you have no chance of stopping it. And when I say real time, I mean, like, not after the fact, right? It can't be like a trade, like, hindsight's easy, right? I should have exited, there. That doesn't work for anger, for FOMO, for fear, confidence issues, greed. You got to be able to see it either in real time or ideally even before it's coming up, right? Those are your best setups, right? Your best setups are the ones you can kind of see coming. You get in the right time and you're able to exit at the right time. Well, psychology is very similar, right? Well, can you recognize, well, no, actually now your FOMO is forcing you to get into that position too early. Can you see the indicators that tell you that that emotion is rising and that you're likely to make a mistake? If you can't, everything gets harder, right? So one of the first steps, right? The first step really is to map your pattern, to map and understand what is happening in those moments. What are your thoughts? What are your emotions? What are the reactions? What are some of the behavioral signs, right, that tell you that this problem is beginning? So that's number one. Number two, now once you recognize that FOMO, or let's say anger, is forcing your hand to get into a trade prematurely, then you need to get at the roots of that problem, right? The anger, the FOMO, they're actually just symptoms. They're signals of a deeper problem, right? Greed, anger, fear, confidence issues, right? These are not, I know they're problems, but they're more like symptoms, right? So let's use a quick analogy. If you're walking down the street and you feel pain in your foot, what are you going to do? I mean, most likely you're going to take your shoe off and just see if there's anything in there, right? And let's say there's a rock in there. It turns out the rock is the problem. You wouldn't say that the pain was the problem, right? You wouldn't say the pain is the problem. No, you'd say this: the pain was the signal alerting you of a problem. FOMO, fear, anger, greed, confidence issues, they are like the pain points in your mind, alerting you to underlying flaws, biases, illusions, wishes, hopes that are actually forcing you to react negatively in these situations. So for example, let's say you have an expectation to make money from every day or every trade. Now, logically, you may say, well, that's stupid. Nobody can make money from every single trade or every day. But You have that goal, you have that wish, you have that desire. Well, what happens when you lose? When you lose, you're going to overreact. You're going to get angry. You're going to maybe get fearful. You're going to now force trade and have some revenge trading pop up. So the problem was not the anger, right? The problem was that you were walking in and imprinting into the market this bias of wanting to make money from every trade. Or maybe you want to make money quickly. Maybe you want to get through this combine fast. Maybe you don't want to have to reload. Maybe you've got a little bit of the F-its, right? Where you're down 30% in your account. You say, F it, you're going to throw the other 70 in because you're not willing to like grind it back the right way. Okay, so there's lots of these flaws and biases that exist in the back of your mind, and you've got to dig them out because they are the real problem that you have to be solving. And that makes things a little bit more complicated in the short term. There's no doubt about that. Okay. Now, many of you are trying to kind of get your bearings here and figure out how to develop a system for, how to make money in the markets. Well, now I'm adding some complexity to this. You've got to debug your own kind of mental system in a sense to create real stability day in and day out. And that is harder than just getting a quick tip and saying, oh, here, when you're, feeling FOMO, well, just sit on your hands, quite literally sit on your hands. Or when you're feeling FOMO, get up and walk away from the desk and, do 5 push-ups. And I mean, there are lots of these tricks that are out there and they might work from time to time. They're not bad, but are they really going to help you to develop a system? Right? To me, they're no different than just like a stock tip. It's like, oh, buy Tesla today. Or buy some other, up and coming stock that nobody's heard of. And so, it's like a stock tip, it doesn't make you a trader. Making money in a stock tip doesn't make you a trader. Okay. So I know I've said a lot there. If there's some questions on what we're talking about here, by all means, post them. I'll get back to you here. But the last step of the system, right? So once you've mapped it, once you can see in real time that you've got the problem, now you understand the cause of it. Then the next thing is to deploy some logic into those moments and to fight basically for progress, to fight against the rising tide of FOMO and anger and greed, et cetera, but with the right logic, right? With the right understanding that you're correcting, right? Effectively that rock in the back of your mind. That's what you're trying to correct, right? You're not trying to correct the anger. You're trying to contain it and control it in the moment, right? But that will only work for so long, right? If you don't know this one principle, it's actually really important. We kind of touch on it. One fundamental principle of how the mind works is that the emotional system has the power to shut down higher brain function, right? So your decision making is going to get compromised. Your ability to think clearly is going to shrink, and your ability to control your emotions is going to disappear, right? Emotional control is a mental process that can be shut down by intense emotions. It's a sadistic, crazy way that the brain is organized, but it's real, okay? When your emotional system rises too high, the emotional system shuts down higher brain function and shuts down your ability to control emotions, right? So you have to attack the rising tide of emotion early, because if you don't, it's going to get too big and you are going to have to take a break and come back a bit wiser, right? So the whole system and the whole process is designed to get you ready to attack these issues early, right? Before they become big, with the right logic, so they actually can get corrected in the moment. So that over time, you're not fighting up against the same problem again and again and again, right? Just like as in trading, you want to develop skill, right? Skill allows you to kind of graduate to higher and higher levels, both of, trading, but also proficiency. And mentally, you want the same thing too, right? If you've done your job well, in 3 to 6 months, you should be battling up against a different set of trading issues, right? And not the same ones that you're fighting right now. All right. Let's see if there's any questions that have come in on the system stuff before we farther. Okay. There is not. So I'm going to get into a few of the questions that have come in advance first. And then I will get to your questions that are coming here. So Steve is asking the usual question. When I'm trading on the sim, I'm an awesome, profitable trader. When I'm trading with real money, I'm a wreck. How do I fix it? How do I fix this? The first thing that you got to realize is that the simulator is not trading. Okay, simulated trading is not trading. much like the driving range is not golf. Now, I know you might be saying, well, yes, but I'm, in a simulated environment, like this is trading. Well, yes, except that you're different, right? If you're going to make the transition smoother, you have to be able to raise the stakes within a simulated environment and make it feel real. And it's never going to be as equal to actual trading, but you've got to make it feel like it's do or die, right? Like that this matters, that every single trade matters, and your proficiency is really high. Now, since you've traded in the live market and you know that what you're dealing with is, and you know some of the issues that you're dealing with, it's giving you an indication of what you've got to fix. So when you say you're a wreck, to me, that tells me that you're probably experiencing a lot of fear, a lot of nerves and tension. So there might be a couple of things here. Number one, if you were a professional golfer, if you were a professional athlete, you would have had to have climbed the ranks over a long period of time, right? To get accustomed to the natural intensity of those environments, right? Like playing in a professional golf tournament. But even as a professional, right? If you are going to go play in a major championship, if you're going to try to win the major championship on the back nine on Sunday, right? There are increasing levels of intensity that you still have to go through. But as a trader, all you need is money. And all of a sudden now you're in a live market, effectively playing in a PGA Tour event or playing in the NFL. Like just like that, you're right there. And you're not really accustomed yet to the inherent intensity that environment brings. So you just you kind of just have to learn and get accustomed to it and become more comfortable with it. But the number one thing that I would say to help you to do that is to understand that nerves are not bad, right? There is a natural intensity to trading. And many traders think that they should feel this calm and this peacefulness. And certainly when you're in the sim, you might feel that way. You might feel this kind of excitement and energy around getting better versus the intensity that, oh my God, my goals are on the line now. I don't want to F this up. Okay, well, here's the thing. At a basic level, those nerves can be a good thing. And this actually was quite a big catalyst for me as a golfer, right? So I wanted to play professional golf. That's kind of where my background was, but pressure was really affecting me. When I understood that my hands could literally be shaking and it was immaterial to my ability to hit the right golf shot or to make a putt, it was transformational, right? Nerves are not bad. If you think they're bad, then they're bad, and then they'll make it even worse for you. So again, I think you've got to really understand the battle that you've got to bring to the simulated environment and make it a lot more real. I know that's hard, but that is the task before you. All right, next question. Tara's asking, why can't I just trade my A grade strategies? So this question actually fits very closely with what I was saying at the outset of our session today. A lot of traders, right, are just looking for, right, kind of easy answers. And the word "just" in that question, I'm not trying to be nitpicky, but why can't I just trade my A grade strategies? That word "just" is trying to simplify this. It's like, it seems very simple in your mind that you know what you should do. You should just do it. But the reality is that as human beings, we have our own internal variation that exists, right? There's variation in the markets. There's variation inside us, right? For you to only trade your A grade strategies, you have to become masterful of your own internal volatility. And until that point, right, then you're going to be at the whim of fatigue and FOMO, or just the fact that you slept poorly, or there's something going on in your personal life, right? To be able to kind of become masterful means you've controlled for all of the variables that are going to create that inconsistency. And that's challenging, especially early on. So from a pure kind of trading sense, study your pattern, right? Collect data around those instances where you are going to violate your rules and take a B grade trade, right? Why are you doing that? In what situation are you doing that? What thoughts are coming to mind? Actually, let me show you a bit of this tool here. So this, if you all can see, this is an example of a data collection worksheet. Okay, now this is the beginning part of my strategy. Okay, so this is what you need to do around any instance where you're taking a trade below your A game, right? And so you don't have to fill out all of these different categories. You can see down the left-hand column would be the examples of what we're be the kind of the categories of what we're looking for. On the right-hand column are the examples, right? So we're looking at the situation, the trigger, right? The trigger would be like, what's causing you, right, to violate your rules? What are the thoughts that are coming up in that at that particular time? What emotions are present? What behaviors, actions and behaviors are kind of similar, but behaviors I would say are kind of more the internal, right? Like I might be tapping my foot or kind of staring at a screen, whereas actions might be, I'm kind of jumping from screen to screen. I might be hyper-focused. Changes in decision-making, changes in market perception, and then mistakes, right? Now you all can read through the example here, but this is an example of what you need to be doing around your B when you're taking B trades and when you're taking C trades. This data collection helps you to become more aware of what's going on in your emotional state, what's going on in that emotional volatility, right? It takes some work, right? So what I would suggest is, and I probably can get this to you guys, but if you want it right now, you can go to my website, jaredtendler.com/worksheets, and you can download this. I'll get them to Jack and John, and they can share them through internally at Topstep. But I mean, it's not that complicated. You just have a notepad next to you, but like literally during the trading day, like be writing down these data points. They're critical, right? Because that is going to help you to develop the map that is going to tell you, kind of what the indicators are that you're maybe going to make a mistake like this. Okay. Next question. So John is asking, the desire to win often leads to over trading or taking bigger losses than I planned. Logically, I know trading is a probabilities game, right? Obviously 50 to 60% plus win rate with a greater than 2-to-1 risk reward ratio. But the emotional desire to win all the time, right? As an example of what I said earlier, right? Expecting to win all the time, desire to win all the time, right? Gets the best of me several times a month and can sour an otherwise solid trading week. What are your tips for the ultra competitive individual that doesn't handle losing streaks or red days well? Well, guess what? As a trader, you have to become a great loser. And the ultra competitive people that I've been around that have come from other environments and then came to poker, came to trading, they have not learned how to lose properly. And trading is going to force you to do that, right? You have to become a good loser. And I'm not saying loser as in losing money. I'm saying loser as in like a boxer who's got to learn how to take a punch. I mean, if you got a weak jaw, you're going to get knocked out a lot, right? You've got to have a strength in you that's able to take the loss. Now, some people hate losing because they just hate the feeling. Makes them feel like a loser. Feels bad. Okay? Take the punch. Okay? So when you take the loss, take a couple deep breaths and just absorb it. Feel it. Don't react on it. Right? This isn't like boxing where you have to immediately start fighting back. Right? You, as a trader, have the ability to be sophisticated. You can be timed. You don't even have to trade the rest of the day. Bottom line is I want you to sit with it. I want you to feel it. I want you to own it. And I want you to understand it doesn't mean anything long term. It just means that you took a punch and you lost. So conditioning yourself to that over time, right, it can be made a bit faster by understanding, that you just got to actually take the punch, take the pain, right? But if you react to the pain, right, a lot of traders, who struggle with this, there's a sense of disproportionality. It's called prospect theory. It was Daniel Kahneman, who wrote Thinking Fast and Slow, which is a fantastic book. Definitely recommend you read it. But he kind of originated this concept, which is that losing hurts more than winning feels good. And so for a lot of ultra competitive individuals, right, the losing has a lot more pain to it because it's not kind of counterbalanced by the wins. So you have a solid winning week, but that's what was expected. So it doesn't feel very good. The quality trading that you just had during that week doesn't feel very good because that's what it was expected. The losing, unexpected, tons of pain. So you can reduce some of the pain by starting to change the nature with which you are kind of focused on the losing and really trying to amplify and intensify the kind of pats in the back and the good feelings that come from proper trading, right? You can start to rebalance things a little bit more. All right. There are more questions that came in advance. I want to get to a few of the questions that have come in just to kind of have a little bit of balance here. All right. How can I distance myself from money as a goal and keep my focus completely on the journey? Well, I don't know that that is ideal. Okay. I am of the opinion that not making money a goal, or at least part of your goals, in the long term is weak. Now, I'm not saying that that is true for everybody. There are people for whom they are at their best when they have absolutely no connection to the money. But to do that in trading, I think is tough because money kind of is a fact that you need. Imagine playing a basketball game and just never getting to look at the score. It might tell you that you're doing things wrong for a much longer period of time, where if you're just focused on the journey, right, you might not actually learn the skills, as fast as you can. Of course, you can go too far the other way. And I think this is where, money can be problematic because money doesn't tell you the full picture in the short term. Okay. What you need is to use a tool. Let me pull this worksheet up and I'll share my screen. What you need to use is a tool that is going to help you to grade your performance. Okay. Your performance is really what matters most day to day, even week over week, right? Money is what matters most in my mind, as you start to get farther out, because you can convince yourself that you're trading properly and you may not be, right? Especially if market conditions has changed. And I'm not a big fan of delusion. I don't want you to be delusional. I want you to be accurate. And when you're focused too much on money, money's not going to tell you accurately how you're performing. And so what I want you to do is to do this. Okay? I call this an A to C game analysis. And basically what you're doing is you are dividing your game into 3 categories, right? So A game trading, what does it look like from a mental standpoint, from a tactical standpoint? Now, first and foremost, this is mostly about recognition, right? Can you recognize when you are trading at your best? Many of you can. Can you recognize when you're trading at your worst? Many of you can too. Can you recognize when you're kind of in that middle zone, right? B game, and things are a little bit more complicated? Many of you can't. And so this tactic, this tool is important, both to kind of identify your B game, so you kind of have a full scope of what your trading, kind of looks like right now, right? Your trading performance looks like right now. But what it does is it gives you a chance to kind of grade your trades, grade your performance. So you should do that. Literally grade your trades and grade your performance and pay more attention to that. And when you're falling short, right, and you're in your B game, your A game, or in your B game or your C game, figure out why. Figure out what the situations are. That's why you go through that data collection and try to map your pattern, try to understand what's going on, and then ultimately breaking it down and trying to correct it. But the bottom line is, right, that if you can at least grade your performance, then you've given yourself a non-monetary way of understanding how you're doing. And that will help you, establish a bit more kind of mental stability day to day. And I think get the benefit of what you're doing here, which is distance yourself from money. Money is a goal, but your performance really needs to be a big goal as well. Okay, next question. What sort of exercise would you recommend to solve the problem of letting it go after missing a trade or after freezing and not pulling the trigger? So again, I can look at this as like a quick tip, or we can look at it from the bigger framework of the system. Now, the system of injecting logic, right? This is a real-time strategy, right? To inject logic means that you've broken down the problem. You understand why it is that you froze in the first place and didn't pull the trigger. My guess is that when you freeze and not pull the trigger, right, you're having difficulty letting it go because it feels like a mistake. So the letting go of a mistake is actually a bigger mistake. You don't want to let go of mistakes. You want to freaking fix them. So what's the best way to fix this mistake? We don't even know what's causing it yet. Best thing to do is identify what's going on for you. Do the data collection. Write down what was going through your mind when you were freezing and unable to pull the trigger. And maybe before that. Maybe it was that you were on a losing streak. Maybe it was a fast-moving market and you got scared that you were going to get maybe kind of chopped out. Bottom line is you got to identify what's going on so you can fix the mistake. I don't want you to just let go and move past these things that are actually really problematic. I want you to be pragmatic about trying to solve it. Right? Short of that, you can take a couple of deep breaths, try to get yourself reset and refocused. But I would suggest doing that after the work that I'm suggesting, right? And get yourself reset after having captured some of the reasons why you're struggling. All right. How to work on boredom as a trigger to exit a trade. I think you got to use your goals. And I'm going to share another tool. You can see I'm kind of full of them. But again, this is, I think, important just to show you that there's more than just a bunch of advice, that there's actually, a system and a process behind all this. So this is a goal and plan document that I use with a lot of my clients, also available on my website, and also I'll send it over to you guys. Bottom line is, right, if you're going to set it as a goal to make a certain amount of money, to become a certain level of a trader, right, I want you to set it as a goal to hold trades longer. And then in the moment when you're getting bored, right, what is that boredom really telling you? That there's not much action, there's not much interest. Well, you should be really freaking interested in achieving your goals. And holding your trade to target is quite aligned with your goals. So yeah, you got to force and fight your way through. But I think sometimes, right, the boredom, it's an indication that you're kind of lacking energy, lacking focus, lacking intensity. And when you reconnect to your goals, it can be a catalyst to kind of wake you up and get you focused on what you need to be in order to stay in that trade. Next question that came in advance. Jared, been following you for a few years now. My question is with FOMO around all the media available surrounding trading and trading improvements. Seems like everyone is putting media out all the time. That has me overwhelmed to the point of trading paralysis and the attention span of a gnat. Any suggestions on how not to keep getting sucked into everything, redirecting focus on trading, and not having FOMO of the next best idea? This is a confidence problem. And right, you sort of framed it as FOMO, right? You're fearing that you're going to miss out on like the next thing that maybe is going to help you get better. But I would suggest that if you don't have a system or strategy that is profitable, then you've got to be a bit more robust in the way in which you are selecting information to learn from. You can't be learning from 5, 10, 15 different sources at one time. I mean, nobody can learn like that, especially early on, right? If you're looking for fine tuning, sure, you can kind of dabble and see which one fits, but that's not what you're talking about here. What you're talking about is that you don't have a solid base of which to operate from. Now, it's either because your strategy is actually weak, you're not profitable yet, and you need, and so that's the place to work on, or you actually have that, but you don't really believe in it. And that's the lack of confidence that I was talking about. And so you're like looking for more and more and more, not realizing that you actually have enough, and you need to just trade it and work it and then fine tune it a little bit. Right? I mean, sometimes it's easy to just like look for the next kind of hot thing or thing that's going to take you to the next level when you're actually already sitting on something that's quite profitable and need to focus on that. Is there a key exercise or routine to keep a calm mindset when either entering a trade or coming back from a losing one? So like athletes, I think routines are really important. And depending on the frequency with which you're taking trades, right? If you're a high frequency trader, you're taking, 50 to 80 trades a day, right? Your routine is going to have to be really, really precise. But if you're only taking 3 or 4 trades a day, or ideally should be taking only 3 or 4 trades a day, then you've got plenty of time to kind of go through a process with which to prepare yourself for and to exit. Now, the preparation part, I think, needs to be done ahead of time at the start of the trading day, right? So that might mean, really looking at your goals, right? So you're kind of focused on what you're looking for that day from a strategic standpoint. You've got watch lists or, a strategy for the day already kind of predetermined, like levels, et cetera. Then from a mental standpoint, what is it that you're going to do to kind of help to keep you in a calm state of mind? Well, one of those things ought to be like, what's going to take you out of it? I mean, a calm state of mind should be your default. Now, some of you come into the trading day already kind of on edge and way too intense. And, so if that's the case, then you got to be doing things before you even start the trading day. If that's not the case, and maybe you get like a spike of fear as a trading opportunity comes, right? Well, again, what is the reason for that? Now, it could be out of fear of losing, could be out of hatred of losing. It could be out of some weakness in confidence. You don't really feel that solid about your trading strategy, and so it's not really a confidence issue per se. It's like, but the weakness in confidence is indicating there's a weakness in your strategy. So there's a weakness in strategy, and there's it's still developing. You're still new in this game. Like, that's okay. I think sometimes like a feeling weak about where you are, right, in your progression actually causes a lot more emotional volatility than it ought to. Like, it's okay to suck, right? It's okay. You just structure your system, structure your process in a way that it kind of accepts where you are, right? Denial of that reality oftentimes makes things worse. So you might be feeling a spike of anxiety because you feel like you should be better than you already are. Accept it. You suck. You're learning to walk here. You're an infant crawling, just not even able to walk yet. That's fine. I think for a lot of people that come into trading after having been successful in other endeavors, it can be hard to be an infant. It can be hard to be a baby, be hard to be a beginner. Okay, well, your prior track record doesn't mean a whole lot. It means that there's potential here. Like, you've obviously been successful. So yeah, that gives you an indication that you could be successful here. But there might be some things that you learn from those other environments that are actually going to make it harder for you to be successful here. So there's no guarantees. Be a baby, be an infant, allow yourself to be, and then let the progression kind of climb from there. All right. Let's get to the next question that's come in. What do you journal to help oneself become a more positive trading coach? So again, I think positivity for the sake of positivity is a Band-Aid. I would rather you balance those kind of affirmations and that positive thinking with an understanding of the cause of why you'd be negative and pessimistic and angry or fearful, right? We want to get those rocks out of your shoe. We want to get the rocks out of the back of your mind. And those things are just going to keep throwing crap at you. And all the positive thinking in the world, which is a mental process, is not going to stop a rising tide of emotional that oftentimes can become, very negative. So from a journaling standpoint, what I would suggest in real time is actually writing down all the negativity that is there, right? I mean, the negativity is real, okay? Working through it, understanding what's causing it, that's the next most pragmatic step to deactivating it. I think a lot of people think that negative thinking is just a functional reality of how the human brain works. And it's not, okay? It's an example of that pain, right? The signaling something flawed, something delusional in the back of your mind. And you just got to take the time to actually work through it. All right, I might as well show you one more tool since I'm going through a lot of the system stuff here. And maybe for the next one, we won't have to do this as much because you all will have recognized a lot of the process. But this is my tool for that second step, right? So remember, the first step is mapping your pattern, right? The data collection process is an important part of that. The next step is getting to the root of your problem, right? Understanding what the rocks are in the back of your mind. And this is my tool. I call it the mental hand history. Don't get hung up on the name. I suck at naming things. And this comes from poker. I just wanted people to have a sense of like ownership over this work that would be similar to working through poker hands, much like they would with a coach. So this 5-step process is a tool that you can use to get to the root of the problem. Find the rock, okay? Step number 1, describe the problem in detail, right? So this example, I don't trust my own analysis and wait for confirmation from others, right? Before initiating a position, my confidence is low, although I've done my homework and know that I have a system that works. I'm sure some of you can relate to this feeling, okay? Why does it make logical sense that you have this problem, or why you think, feel, and react this way? Now, this question is really, really important, and it might sound a little fuzzy. Why does it make logical sense that you have this problem? For many of you, it feels irrational and illogical. And I get that because the reactions are very out of line with what you ideally and optimally would be thinking. But the bottom line is the only reason it feels illogical or irrational is because you don't yet understand the reason. That's it. It is not factually irrational. It's irrational in the absence of logic that would explain it, which is what we're trying to get to in steps 2 and eventually step 3. So why does it make logical sense? I don't want to incur any more losses. So I become extra cautious and make sure that I'm buying where it makes sense to. I want to do things the right way. So I need confirmation from more experienced traders. Perfectly reasonable. Perfectly reasonable. Makes sense. Where's the flaw? I already did the market prep and due diligence. This goes back to the confidence example I was just saying. I don't need confirmation from anyone else. They're just telling me what I already know. I already have a good system in place, right? And there's a trust factor that needs to be baked in here. And when you're beginning to kind of graduate to higher levels of proficiency here, it can be tough to make that jump, to make that leap of faith, right? But I promise you this, you will learn way more by trusting what you've learned than you will from continuing to go against it. And learning at this stage needs to be your number one priority. Making money will come. Okay, if you're building a new business, what's the time frame from which that business is going to be profitable? If it's an existing business and it's a plug and play, sure, you can be profitable in a couple months. Many of you might have that with the type of strategies that you develop. For those that are going to develop a novel business where you're going to create your own fingerprint as a trader, develop your own strategy and system that certainly borrows from others, but becomes uniquely yours. It's going to take you a year, 2, maybe 3 years to become as profitable as you ultimately can be. So what are you going to focus on in the near term? You got to focus on learning and growth and development, and going with what you're learning is the best way to learn more. If you keep making the same mistakes, not trusting what you have, right, you're basically sucking the life out of your progression. You're not able to learn and progress because you just keep learning how not to trade your system. All right. Steps 4 and 5 are basically the correction of that flaw, and then ultimately why that correction is correct. So you kind of understand the full scope of that strategy. Okay. I know there's a lot more questions here than I'm going to have time for. We've got about 18 minutes left here. Let me get to a few more that come in. Number one, I'm a degenerate gambler. How do I get out of this mindset? So what I said earlier of like looking for easy answers to complicated problems, that would be the most prime example of that. If you're going to get out of being a degenerate gambler, you got to understand all of the reasons for why you are gambling like this. Right? This is not a mindset. This is a skill that you have developed, right? For over a long period of time, right? You're very good at doing this, and you don't really understand how it's developed. So in the mental game of trading, right, I call this desperation, right? There's a desperation that sucks you into making decisions that are really against your interest long-term. And if you're going to take this on without the help of a therapist, okay, you're going to need to follow that prescription to a T and really protect yourself against the outsized losses, because it's going to take you a long period of time to change this, right? Imagine if you tore your ACL, right? Talking like 9 months to a year to rehab that injury. The injuries psychologically that are causing you to be a degenerate gambler, right? They are not going to be easily fixed from something I could say right now, right? So you either have to work with a therapist and really get to the heart of this, or you got to work with my book and follow that prescription to a T. And even then, we're talking a minimum 6 to 9 months of work to get yourself out of that. Can one force oneself into a flow state or grease the wheels to get into one? Yes, you can. You can't force yourself into a flow state. Flow and the zone is like a delicate mixture, and force is the thing that will kill that. Okay. So there is no randomness around the reasons for why you tilt, why you experience fear and FOMO. Like there's predictability around all that, just like there's predictability around the flow and the zone. Question is, what are those factors for you that most get you into that place? Now, in my experience, there are kind of 2 primary factors. Number one is the right energy, right? You need a very balanced, stable energy. Now, that could be anger. And you might say, well, that's kind of the antithesis of stable and balanced, but they're the masters of their emotions, like the Michael Jordans and the Tiger Woods of the world, right? They have harnessed anger into a tool that they can use for getting in the zone. Fear can be a tool that is harnessed and used, right? So we don't have to necessarily look at what is like a pure emotion. We're just looking at energy. It has to be right. So you got to figure out what that right mixture and balance of energy is for you. Number two, you need to have clarity of mind. Okay. You need a mind that is clear. And what is the antithesis of that? Cramming your head full of lots of information before you sit down to trade. So what I would suggest is you do a couple things, right? Just try to gain more understanding of what are the factors that produce that ideal energy and that clarity, and start to reproduce them. And some of the things that take away from that energy and clarity would be things you have to solve for in your B and C game. All right. Another question that came in advance. Is there a key exercise or routine? Oh, actually, I already read that one, right? Looks like if you could pick one solution of how to deal with fear, afraid to take a trade or jumping out too quickly, what would it be the best one to really work on first that will have the most impact? Again, right, I could give you a quick tip. Is it really going to work for you long term? I think the best thing you could do is in real time, write down what is going through your mind, right? When you're afraid to take a trade, write down what's going on. Just do a data dump. You can miss a couple trades, but if you gain a lot of data from what's going on in your mind, then it's going to give you an idea of what you're actually fighting up against. You know, and it might be the fear of losing. It might be the fear of getting confirmation that you're not as good as you think, which wouldn't necessarily be true from one trade, right? So you're effectively trying to figure out what those rocks are, what the flaw is, and then you can develop an injecting logic statement, some logic that you can use in advance to fight your way through. Now, for some of you, you might have the right logic. You might be able to see it in real time, and then you're still kind of paralyzed. Why? Because when you develop these habits, right? So every bad mistake that you have that is repetitive, doesn't matter what it is, you're good at it, right? The degenerate gambler to the FOMO, to the violations of rules because of tilt or revenge trading, you are good at those things, okay? You're skilled at it. Now, obviously it's not the skill you want, but we have to deal with reality. And so to break through those patterns sometimes means, you know, kind of altering the way that you're trading just to kind of give yourself a chance to let that logic disrupt that pattern and do something different. So you might have to scale down the size of your trades. You might have to practice in the sim and then get back, you know, but again, when you're practicing the sim, you're injecting logic like it is happening in real time or in the live market, you know, or, you know, there might be other adjustments you can make to your trading strategy just to give yourself a chance to get over the hump and take the trade and see what happens. All right. Yeah. Next question. Is there a good way to deal with a continuous streak of losses or a method you should take when this happens? So I'm not sure what's kind of in this question. Because, you know, very often if you're dealing with a bad streak of losses, right, some emotion is going to be at play there, right? You might start to lose confidence, and then you might start to dabble with other strategies or systems. You might start to tweak your own. You might start to second guess certain positions. You might start to stay out of trades and then, you know, overreact when you've missed it and getting back in an opportune time. So yeah, I mean, I think like everything else I've said so far today, right? You have to understand what's happening when you're you know, in a bad streak like that, and then to take action early. So let's say for you, a streak of losses is not a big problem when it's, you know, let's say 3 days in a row and they're, you know, of normal size. Okay. But on day 4, now all of a sudden things start to fall apart. Now you start to force trades. Now you start to maybe miss trades that you should take. So what you would want to do is take action to deal with the pain, deal with the anger, deal with the loss of confidence after day 2 or day 3, or I mean, certainly after day 3, but certainly at day 2 would be kind of getting ahead of it, right? And reinforcing, right, either points of confidence for you, right, the viability of your strategy, or the fact that maybe you're not sure that it's viable, that the market might have changed, and you're willing to scale down a little bit. But be strategic about what you're deciding rather than reactive, which is likely what happens. Any suggestion for daily staying in the groove? Breaking a little discipline in trading can even be more fatal than poker. Agreed with that. Challenging with all the dynamics of life, family, 2 jobs, to keep calm, and the same approach, same discipline. Yeah. So what I would say is, like, you need to have a consistent routine. And for me, a routine has to include a reconnection to your goals, a connection to your strategy and what you're going to do, right, from a technical standpoint, and then mentally doing the same thing, right? What are you battling up against? You do those 3 things, takes 3 to 5 minutes, take a few deep breaths, maybe listen to a song to kind of motivate you to do those things, right? And then at the end of the trading day, I strongly suggest, like, I know many of you, keep a trade journal, but from an emotional standpoint, from a mental standpoint, I think it's really important to do kind of like a data dump. Just get out of your head what's kind of ruminating in your mind. It could be mental related to some positions and like legitimately just like thoughts about trades that you took that you didn't take, and just more kind of like the technical side. Just get that stuff out. Maybe there's also thoughts from a mental and emotional side. Get them out. What that does is it helps you to kind of close up the door to trading and let you move on and enjoy your life. And you actually kind of rest and recover better. You're more present in what you're doing, right? Rather than kind of continuing to ruminate on those things. Now, you don't have to do anything with that information right now, but then when it comes time to doing more work on your trading, you can kind of look and see the patterns over a week or 2. All right, here are the things that I've been thinking of and struggling with. Like, holy crap, you might see some patterns that actually can help you either from a technical standpoint or a mental standpoint. So those daily kind of data dumps, those daily note-taking and journaling, can be really, really important from both a balance standpoint and consistency standpoint, but also from a progression and being able to move you along a bit faster. All right. How do you feel about a trader who is looking to automate or code their edge to eliminate the mental challenges that they know are present when their hand is on the mouse? Pros and cons, financial markets. So the pro obviously is if it works, then you make money in your sleep effectively. The con, right, is that you're probably limiting your upside. I think the best traders that I've come across are able to have some interfacing with algos so that there's discretion that they're able to utilize. And yeah, you have to be able to have emotional poise, presence, patience, etc., to be able to do that. So if you're going to algo to control your emotions, you are limiting your upside. So that's the con. I think that there's nothing unsolvable in the mental and emotional side of this, right? That whatever you're struggling with can be solved. I mean, I've seen it all in my 10 years, right? The mental game of trading includes the most common problems that I've seen, over the 8 years prior to writing that book that I saw, and it gives you the system so that even if your issues are somewhat atypical, I mean, you can work through it. In my opinion, right, there is no problem that is unsolvable. We just kind of haven't figured out the causality yet. Once you figure out the causality, man, everything gets easier. So I would strongly encourage you, even in the process of trying to code and automate, right? That could just be like kind of a short-term band-aid, kind of like putting a cast on a broken ankle. Like, all right, cool. I'm going to, have this algo that's going to help me in the short term to make money because I need to. But in the long term, I'm going to keep working through the emotions that were present beforehand, because you can work on them on the sidelines and then, steadily give yourself a chance to test it and progress. Some people say, fake it till you make it. Is that healthy to keep imagining the end goal of becoming a consistent and successful trader? That's not faking it till you make it, right? Fake it till you make it is believe that you have the skill before you do. And I think that's dangerous. So if confidence was on a scale of 0 to 100, okay, 0 meaning no confidence, 100 meaning insanely overconfident, like the American Idol contestants that have no singing voice that think they do, right? 50 would be like perfect confidence, the most accurately able to assess my skills and competencies. So my confidence is perfect. I think 51 is actually ideal, because in trading and in the world, it's impossible to know exactly how good you are, right? So you can be close, right? You can estimate it, but you can't know exactly. So having just a little bit of overconfidence is perfect. So if we want to say faking that, then cool. But I think most people are like, all right, really believe in yourself. Okay. Belief is different than confidence. Belief is aspirational about the future. Confidence is, what am I capable of right now? And too many people, especially traders, suffer from overconfidence and don't even realize it. We look at like the cross section of just the general public, and this is especially true in Western societies. People are overconfident by default. Like the default average of people is overconfident. Okay, and we know this because if you measure people's estimates of their sense of humor, their intelligence, their attractiveness, right? All of these kind of characteristics that they may have about themselves, on average, like 70 to 75% of people think they have above average intelligence, above average sense of humor, or above average level of attractiveness. And obviously that can't be true. 25% of people are full of it, and maybe even more than that, because there are also a lot of people who undervalue themselves. So it could even be 30 to 35% of people are inaccurate, right? So I don't want you to be overconfident. Overconfidence is dangerous, and it probably is the most silent danger that exists in trading, right? That so many of you are overconfident and don't even realize it. How can I recreate the mindset I have during a winning streak? You got to study it, just like the question that came in about reproducing a game. Same kind of thing, right? You got to understand the factors that are present, right? Because it's not something that is random, right? Maybe there are frequencies in the market that are like rewarding you, giving you a higher proportion of wins than you should at the time, and so then you get actually overconfident in that time, and so you're actually trying to recreate overconfidence. Heck no, that's not what we're after. So, if in that winning streak you believe that you are in a true A game where you're seeing things with greater nuance, there's clarity, there's poise, there's patience, there's presence, there's focus, there's discipline, there's clarity of thought. All of those things are present. Cool. Figure out the factors that are present that help you to do that on a day-to-day basis. That's how you gain control of it. How do you help traders develop a sense of detachment from the outcome of individual trades, while also understanding and implementing positive expectancy as a key principle in their trading strategy to ensure long-term profitability despite short-term losing trades? I'm guessing you were a lawyer in another world, but man, that is a very, very clearly well-articulated question. I don't think detachment is what you're after. Detachment implies like a numbing, a denial from the emotional volatility that exists. So what we want is to be attached to the things that we have control of in the short term. So when I showed the A to C game analysis before, right, you want to be attached to your performance. You want to be attached to the factors that you can have control of in the short term. That is going to ultimately give you that long-term profitability. And by doing that, right, you're less attached by default to the short-term outcomes of individual trades. But at the same time, right, if you are having a lot of emotional reactions, right, to those individual results, then you got to understand, again, map it, break it down, analyze it, get to the heart of it, and correct it. And that becomes an additional part of the strategy. But I think detachment, when you have, let's say, anger, and that is numbing, that is a bad long-term solution. I know that it is a common one in the psychological world to do that, but in my experience, right, the market is going to expose every weakness, and at a minimum, it is just going to kind of limit your upside, because now you're kind of having to continually defend against this reaction to react poorly to individual trades. You could master that very well, right? But it's still going to be a mental process. And that means that part of your mentality is not devoted towards paying attention to the markets and being tuned into what's going on. It is instead like kind of defending against your own emotional reactions. So that's a losing proposition in the long term in my mind. All right.
Yeah, Jared. Yeah, like James Brown. Jared Tendler, the hardest working man in trading psychology. That was impressive.
I had some things that I thought about adding, but I did not want to interrupt the flow. It was amazing.
Thanks, John.
Yeah. So for everyone out there, we've seen a few times, we will be, we've recorded this it won't be an impressive visual presentation of a Zoom, but we're going to put it on the Topstep YouTube channel if you want to check it out. And we've been recording questions we couldn't get to, so we'll have more of these in the future, and we'll answer them then. Thanks everyone for coming here, and especially Jared. Thanks for getting through all those questions. That was really good. So thank you so much. Yeah, check out the Mental Game of Trading or the Mental Game of Poker if that is your chosen profession. If you are a degenerate gambler, maybe change the path a little bit. That's what I took from that there. So
at least in the short term.
Yes. Thanks so much. We have programming on our YouTube channel every morning, every afternoon. Hoag will be there giving it us all. But yeah, Jared, thanks again. And we'll see you all next time.
Thank you very much. Thank you very much, Jared. I learned so much from you and your book. It's truly amazing. Thank you very much.
Thanks, Sean. Appreciate it, man. Very much. Appreciate everybody. Take care. Have a good month.